In today's video, I am going to show you one simple trading indicator that will immediately solve 90% of all your trader problems. And with that knowledge, I can assure you that your profits are going to improve, and I mean improve quickly. Now, I'm not just going to stand up here and talk to you about some silly, obscure indicator that sounds really good but does not work in a real-time market. Nor am I going to sit there and tell you we need to draw a bunch of lines and connect the dots like we're all in the third grade. What I am going to show you is an indicator that, when used correctly, can get you on the right side of the market more than 85% of the time. But better than that, I am going to prove it to you with a series of real trades in a real market using real money, 3 different ways that this indicator is going to make you a successful trader. Number 1, how you will use this indicator as a standalone strategy to manufacture winning trades on a day-to-day basis. Number 2, how you will use this indicator as a profit targeting tool. And number 3, which will be the most important, how you will use this indicator to keep you from making a bad trade in the first place. Now, one of the interesting things about this indicator is there's a pretty good chance you already know what it is. In fact, there's a pretty good chance that some of you might be using it right now, but unfortunately, it's been taught to you all wrong, and you've yet to see its true power. So in this video, I will show you how this indicator will help you read the market like you are a seasoned pro, without any noise, without any complications, without any confusion, and how this indicator will help elevate your trading results to a whole new level. So what is this mysterious indicator that I speak of? Well, the indicator I'd like to talk to you about is the ever so popular VWAP indicator, also known as volume weighted average price. And the reason this is so popular, and the reason I believe you've heard of it before or tried to use it, is because when it's used correctly, this thing has incredible power to give you an enormous edge in the market. However, like a lot of indicators, if it's used incorrectly, it's like one of the worst decisions that you will ever make. Now, before I get started with this whole thing, no matter what side of the fence that you're standing on, for those who might be trying to learn this indicator, you came to the right place. For those of you that may have had a bad experience, or maybe you've got a couple of decent strategies that you're working with right now, I want you to do me a favor. If you listen to what I have to say here today, and you follow the step-by-step blueprint that I'm going to provide with you, I can promise you, without a shadow of a doubt, that when this video is over, you will in fact be a better trader. And the very next trade that you make using this indicator will make more sense, you will have clarity, and chances are you're going to make a lot of money. And how I'm going to do that, first and foremost, is I want us to look at this VWAP a specific way. That's going to answer a lot of our questions from the start. Now, I'm sure many of you out there already know what the definition of the VWAP is. It stands for volume weighted average price, which is a measurement of the current day's volume against the current price of the stock. Here's the first thing we're going to do. We're going to change the way that we look at this indicator. What you need to know about it is this. It's what the price should, let's use some air quotes, should be trading based on the current volume. So when you see the VWAP, according to the market's volume it has collected for that day, that's where the price should be. Now let's move over to the whiteboard, and I'm going to try to make a little bit more sense of that statement that I just said. I'm sure you've seen a stock chart that looked like this before, where you've had this nice little consolidated area, right? It's going up and down. It's kind of just moving around, and you don't know where it's going to go. And then all of a sudden it goes on this really aggressive ramp. Or you might see the inverse relationship, where you've got the same kind of consolidation, but you end up having this very aggressive rollover, this waterfall. Now, if we are to lay a VWAP, and I'm going to show you how to set the VWAP in a minute, but what I want to do right here in this specific area is get everybody on the right side. If you've struggled with this indicator, you haven't gotten the results from this indicator, or this thing is confusing you, there's a reason why. And before we even get into strategies and see live trades, we got to understand these concepts so we have the confidence that we need to trade. So a VWAP overlaying that might look something like this, okay? Or if this instrument is moving down, it may look something like that. And I apologize for some of the sketchy drawing here. I'm trying to do this with a mouse, so this is the best I can offer you. I'm not an artiste, I'm a trader. So here's what I want you to think first. There are 2 specific scenarios that you will always, 100% of the time, run into with a market. So there's things that are not guaranteed, things are guaranteed. Here's a guarantee. there will be two specific spots for the VWAP. One will be something like this right here, where you're bouncing around in consolidation. And these two, the stock price and the VWAP, are kind of long lost lovers. They're just kissing each other, just intertwining back and forth, back and forth, back and forth. Then what will, in fact, 100% of the time happen in the future, there will become something we call a separator, where they will separate themselves and start to span out. Now, let's focus on this up move, because I'm sure you've seen this before, and if you've used the VWAP, you're going to run into this almost every single day. So let's go back to the should be. If your VWAP, and I'm going to show you this in live trading and live charts, so just try to follow me here, then we'll move into the good stuff. If the VWAP is sitting down here, according to the volume that has been transacted up to that point, this will be on a 1 minute or 5 minute chart, by the way. You can use whichever one. The formula is the same no matter what. It's telling you that the price should be right there. But the stock price or the assets price is way up here. Okay, now let's think about that for a minute. We have obviously a serious discrepancy here. We've got a stock price or an asset price that is really up here, but then the VWAP is down here. Now, what does that mean? This is what it all comes down to for us as a trader, because when we see the stuff on the screen, what we have to do is be able to decode the information and make a split-second decision. Here's what this means in just straight layman's terms. At that pocket of time, whether it's a 1 minute or 5 minute, just focus on this. That pocket of time, you've got a market that is willing to overpay, can I use air quotes again? Overpay for the right to own this instrument. Now, I said just the right to overpay. They want to overpay at that pocket of time. Now, in the longer term scheme, might not mean anything at all. But for a trader, it means the world. Because what we have right now is a discrepancy where something is starting to detach itself from where it should be. Now, here's where I want you to move your thinking right here so we don't get lost, so we know exactly this is where our edge is going to start showing up. If it's up there, there's only two things that are going to happen. That's it. Either the asset price that you're looking at is going to flatline while the VWAP catches up, because it is a little bit lagging and it will adjust itself throughout the day. So there's sort of like two long lost levers, like I mentioned. They're going to somehow, before the day is over, intertwine once again. And you'll see this in the charts. It will expand, come back, contract, expand, and go on. But first things first. It's either going to stay up there or it's going to push itself back down rapidly into that VWAP. All you need to understand before we get into the charts is we have a discrepancy right there where somebody is incorrect. Now, again, that doesn't mean the asset is overbought or oversold if it's going down. It doesn't mean it's frothy or it's a scam or it's not going to continue. But at this pocket of time, you are losing a certain edge if you are buying something stretched from VWAP. Not because it won't go up over a series of days, weeks, or months, but because at that little moment, if you're trying to scalp or you're trying to day trade, there might not be any value left in that trade. Or the very next move might be a revisit of the VWAP. Now keep that in mind because we're going to go over it. Same way to the downside, you may have the same thing. But before we move into charts here, let's take, as we move off of the whiteboard, a few lessons there because I bounced around for a second. Let's make sure we're all on the same page. The VWAP is an indicator that's measuring where something should be trading. And most of the day you will be intertwined with that, which will give us an edge too in manufacturing the trades that we want. But also there's going to be several times throughout the day where you start to see a separation. And the important thing to understand about that separation is the further that it gets, please write this down, the further that it gets, we start to develop or we start to attract a different kind of trader. Once we start to separate, we start to get into possibly an emotional situation. And that's important to understand the emotional situation because as you'll hear me say in a lot of my videos, emotions are what? The abandonment of intellect. There is no professional traders, consistently profitable professional traders that are chasing that price way up there. I can guarantee you that. Now, let's move over to a live chart And I'll show you what this looks like in a real-time environment. So on your screen here is an intraday chart of the YM futures, also known as the Dow Jones. But before we get into all of that, I guess what would be really cool at this moment is we talk about how we're going to set up this VWAP, because there's a good chance that some of you might have this indicator set up incorrectly. That's why it's giving you false signals. And of course, we all need to be on the same page with the parameters we set for the indicator. I'm using Thinkorswim platform here. So if you want to set it up with them, you click on studies, which is right at the top of your chart. You can go to quick study or add a study, and you will come over here to market strength studies, and you'll see way down there. Whoops, let's go back here. You will see VWAP. Just hit that button, put it right up there on the chart. Now with Thinkorswim, it gives you these like kind of upper lower bands, these Bollinger Bands. We don't need that. And we also do not need any fancy sort of setup with this. So if you've programmed some sort of experimental numbers in there and it's not working for you, you should move off of that. We just need the standard settings, which will be universal through every broker. They'll just give you this certain time period. Now, very important to understand right here at this point, in order to get this right, you must make sure pre-market data is enabled. We need the entire picture. Now, when you're looking at futures, they're trading like almost 24 hours a day, so you have consistent trades the whole time. But if you're trading a stock, we want to enable pre-market data, because every indicator is a data point and we need to collect as much data as possible. Now, I can't stand these upper Bollinger lines, so you can just kind of click on them if your broker does this, hit edit study, and go right up here. You'll see these two inputs at the top, the upper band and lower band. I'm just going to set these at 0 because all we're trying to pay attention to is the VWAP itself, and just hit apply and you'll see, well, there's the VWAP. Now going back to the whiteboard, now take a look. This is a real live chart. What are you seeing here in terms of should be? Always keep that in your mind, should be. So you'll see throughout this time period, right, was just like it was drawn, where the asset is right along with the VWAP and the asset price are coinciding with one another. So what that would really mean, again, in a layman's term, it's trading at fair value. It's a fair price. According to the volume, according to the price, there is a balance there. But what happens? As the market begins to open for the day, what happens? There becomes an instant separation of those two. Now, what we always have to keep in mind at this point, and maybe why this hasn't worked, this is really, really important stuff, right? You have to trust these things are going to give you the answers that you need. One formula to do here that I'll set right at the beginning so I don't forget is whenever you get separation, in case I've confused anybody up to this point, whenever you get separation, write this down. Don't go that way. It's a trick. You're going to get screwed. So you can take a look here real clearly. The market's starting to drop, right from the open. Everybody's like, whoa, 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 what's happened? What's happened? What's happened? Right? I better short it. Better get out. Better get out. But you'll notice there's pretty significant separation. And guess what happens, right? Now, I know a hindsight chart like this is going to give you the answers, but I'm going to trade live with this and show you this is not a joke. But take a look. You start to pull down in here, and guess what happens? Well, you come all the way back up to the VWAP, right? The little kiss, right? And then what happens? To the other side, you get a repeat of the move. It's like they gave it to you twice. You extend all the way up here. And then everybody now is emotionally on the opposite side again, aren't they? They're like, whoa, 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 whoa. We got to buy, we got to buy, we got to buy. It's going to break out. We got to buy, we got to buy, we got to buy. But what happens? You come back down into the VWAP right here. So there's a clear case right there. And you can go back. I'm going to move this down as far as I can move it. You will see every single time there is separation, there is a revisit. That is a 100% guarantee in a market scenario. You stretch from the VWAP, you revisit it. You go under the VWAP, you will revisit it. You go under the VWAP, you revisit. Over the VWAP, revisit, right? Under the VWAP, revisit. Under the VWAP, revisit. 100% of the time that thing is going to happen. Now, to clarify that statement, remember, it is also a lagging indicator. So If the asset stays down, well, let's call it, maybe the market's going to cheat a little bit. The VWAP's going to come down like, okay, I'm going to make it easy on you to bounce. But the point is, one of the most difficult things for new traders, man, is getting on the right side of the trade in the first place. You can't get on the right side of the trade. So this will tell you what to do. So let's stop right there. Stop right there. Here's what I want you to do before we even start talking strategies, because I mentioned in the introduction there was a very important thing, and that was it'll keep you out of a bad trade. So let's write this down. If we are clustered in that VWAP for an excessive period of time, we don't want to trade that instrument because it's not ready to move up or down. Once it starts to move up significantly or down significantly, we can change our mind. For that patch of time, it's off limits. Write that off. If you have too much separation up or down, you don't want to buy a separation up. You don't want to sell a separation down. If your goal was to buy that instrument that went up, you need a revisit of the VWAP, right? And then a bounce, or you need a bounce to sell into. Hopefully that made sense. But let's start with what we should not do, right? And then we'll work our way from there, right? So what I am going to show you now are the strategies that we are going to use in real time, because I believe we've covered how to set the VWAP, how we should be looking at it as a should, and that they will always come back to visit one another like long lost lovers, right? So let's take a look at that here real quick. The strategy first that I'm going to show you is what I call the separator. You've heard me use that word about 100 times already. So 90% of the separator trades will take place within the first 30 minutes. Now, I want to kind of highlight that 30 minutes for just a second. It may not click and register with you right now, but one of the things, like, take this with you wherever you go. It might just be stepping off topic, but when something pops into my head that I find is very important for people, I want you to hear it. None of these indicators will work without context. And time, along with price, is a unique feature. One of the things that gives you an edge is this stuff will happen at a specific time. Like if you watch the John Wick strategy. The John Wick strategy was based off of the opening break or the opening drop. It has to happen at the open where emotions, abandonment of intellect, emotions are the highest, right? That's what we're taking advantage of, the people that can't control themselves, right? So 90% of the separator trade will happen in the first 30 minutes. And what you will use in context with this is range and levels to execute that trade. So think about that for a second. That's what we're going to do, and I'll show that to you. But also, I'm going to show you another strategy that we're going to use from it that's called the KISS pivot. So the KISS pivot happens a little bit later. You'll see the first thing that comes after the separator. So there's two ways to use that. You can either be the super aggressive trader, trade the separator, then flip that position on the KISS pivot. Or if you don't want to go the other way because you really want to be focused on one biased side, then just wait for it to come back. The thing is, there will be a revisit. You have to believe that there's going to be a revisit. It comes after the separation. And again, you use range, level, and trend to execute trades. Now, back to the charts. Let me show you exactly what I mean by all of this right here. This is just a 5-minute chart that we've already discussed on the Dow, okay? But first, we always want to begin with the daily chart, because the daily charts, we don't have to make trades from the daily, but I mentioned this as well with my others. You got to know the data that comes from the daily because that's where your big levels. But what I want you to focus on here to add context is the actual trend itself, right? And I'll give you like a little jump ahead. If a stock or an asset is super bullish, they're going to buy that dip. It may look like, oh, it's going to tank, market's going to crash. No, it's not. It's going to separate from the VWAP, and it's going to be a slam dunk buy. You won't buy that dip. That's how you'll know this is a great dip to buy. Now you can see here, this is the midterm trend here, right? 5-6 months trend is good enough. You got an uptrend right here in the US markets, in all of them right now. Okay, you can call that bullish if you want, or whatever you like to say. You can see that it's up visually with your eyes, and over time you'll realize that. So in an instrument like this, 80%, and this goes for anything that you guys are going to do, 80% of all your trades should be with the trend. You should be trying to buy dips. And if you counter that trend, there's only one trade in my opinion. That would be a parabolic separator kind of short. That's the only edge you're going to have. If you chase shorts in a bull market, you're smoked, right? Same way if you chase longs in a bear market, you're smoked. Now, you can see that with your eyes. I'm going to give you a real quick cheat code, and I do not want to confuse people, but there might be new people that are learning technicals. Here's a cheat code to figure that out. Let's say you look at it and you're like, well, that's easy because it's going up. But what about the one that's like, that's not so easy. Is that in an uptrend or is it down? It's kind of confusing. Is it choppy? One little trick here, going to go back to studies. You can use a simple moving average. Please don't use it for anything else, but just a base guide. I don't want to confuse by adding, I hate indicators to some degree. Just go to the simple moving average down here. And you'll see this automatically lays the 50-day moving average. Simple moving average, okay? I don't want to make any complication out of this. We're not buying off of it. We're not selling off of it. We're not eyeballing this thing. It's for the people out there that might be confused about the trend that they're trading. Your Bitcoin, your gold, your foreign currencies, your stock, whatever you got. If it is above the 50-day moving average like this, even though we've had a pullback in the Dow Jones, you still got to give bulls the benefit of the doubt. You still should be buying 80% of the time in most cases because you're above the 50-day moving average. If you're below the 50-day, then you want to flip that. Most of your trades should be short, and you'll see it's the same thing. You come there, you're eventually going to reconnect there as well. So you can use the 50-day as a cheat code. So the first trade that we're going to talk about is that separator trade. So take a look at this chart right now. Since we're already on it, let me leave it up here. I'll just use this one as a guide. We still would be looking at buying the dip here for trades and giving the bulls the benefit of the doubt because we've remained above that pretty much since September. So every single dip that you buy, we want to look for that early morning flush out, that early morning trickery move to do the buy. Now I'm going to show it to you here. This will be a fixed chart that will be a little bit, tad bit on the hindsight, but trust me, I'm going to do it for real. That's the only way to prove it to you, but I just want you to get the idea so when the live trades come by, you understand. And you'll see that. You'll begin to have these moves. It starts to accelerate lower, and look, it immediately bounces back to it, accelerates lower, immediately bounces back to it, accelerates lower, bounces back, accelerates way lower, bounces back, accelerates lower, and just blows through it eventually, okay? Nonetheless, here's what you need to pay attention to why it works for traders. Even though you have decreased in price over the last few days, and that's what you're seeing on the daily, without question, you're still ripping here, okay? You're still bouncing. And if you wish to short it, my personal opinion, the better shorts are going to come from the parabolics that move into it. So we're going to look for opening moves, right? That move back into that as a separator trade, right? Or if you wanted to short it, we would be looking for bounce trades like this that will push back up the kiss, right? And come back down. So VWAP, if we're looking for a separator trade, we're looking for a very aggressive open up or open down and a revisit of that VWAP. That would be either a short on a big parabolic or a dip buy on a big flush, or you have the parabolic up, you're pulling back into the VWAP. We're going to use that VWAP right there as a base and then see it move up here, or vice versa. You want to short, you're going to look for a short right there. Risks will be above. So those are the two trades that we're going to use, and I will record a series of live trades here. That way you'll see pre-market, how it works, and how we're going to handle this trade from here on out. Okay, let's do some live trades here. It's October 24th of 2024. I want to just let everybody know it's a tad bit late. I like to make these trades first thing in the morning, but they're starting to develop a little later. And because this is the day I chose to record, I'm going to record. So we're going to start out here with Tesla, and we're going to use the KISS pivot here. We have a stock that is a very good catalyst after earnings. It's up a lot. So rather than chase it, let's see if we can get a pullback right into the VWAP here. See if the market chooses to support that. We'll try to do that KISS pivot right off of there and target either the high of day or who knows, maybe it'll really take off running. But that's the key. Rather than chase, we want to get the best execution price possible. So we'll give it a couple minutes. And what we want to watch here too is that candle. How does that candle get picked up? If you guys watched the John Wick video, the box theory video, I showed you noticing that candle. So we need some kind of reversal candle or some kind of wick or some kind of signal off of that VWAP to show us that the market's interested in buying it. Okay, we do have our next candle, and that's exactly what we're looking for. We have the retracement. We have two tests of that VWAP. Looks like it's going to hold. We can buy here, stop here. Apologize for the quick speaking, but hey, we got to get in this thing. Let's try to buy it right here. All right, so we are in Tesla. Price is $247.88. Stop is right there. Target is up towards the high. This is the KISS pivot. So here we have gold. This is going to be interesting. This is a completely different asset class. Again, it's still late. I want you to keep that in mind, but I want to do these trades for you guys so you see how they work and you get the formula. Now, what do we have here on gold? We got a nice bit of separation. I don't want to talk too much. I don't want to miss this trade. Nice separation, but what? We're in a nice bull trend, way above the 50 moving average. We want to buy dips aggressively. We're very, very close to support. So we've got structure. We got a double bottom. I'll highlight all this stuff and go back to it very, very slowly so we all are on the same page. But let's go ahead and buy this. And we're going to target that VWAP. So this is a separator trade. So we are in right there. 27.40.10. And we are going to use stops roughly. And right down here about 27.35. And we're going to target up here in this area. So that's gold. So a real quick update here on the gold trade. Exactly what we were looking for. We have our bounce. We've held underneath this VWAP where we held the support, and it looks like we're going to kiss this VWAP. So let's go ahead and just put the sell up here. Let's try to grab that. We are, okay, we're out there. 320. So that's pretty good. So a little bit of an update here. As they say, a blind squirrel finds a nut every once in a while. By using the VWAP, look, I'm going to sit here and tell you, I did not expect the move to be that powerful. But there it is. You got to be in it to win it, right? You got to take the trade. You never know what the outcome is going to be. You just have to take it in management. Look, I'm not going to sit here and say I saw this whole thing coming, but I did see the VWAP. We did do the KISS trade down there. You are just, I mean, that's just as good as it gets. I mean, I couldn't have drawn it any better. Again, it's not always going to be that crisp. Take it for what it's worth. It's just there to show you. It's just a guide. It will not work like this every single time, just right to the penny. There might be some wicks around it, but there it is. And here you are. Yeah, well, this turned out to be a really nice trade on this one. We are 616. It's two trades that you saw based off of that VWAP, using first the separator trade with gold that worked out for a few $100s. But what was the core of that trade? That trade was based off of a bullish, strong, uptrending chart, an aggressive move lower, a pivot that was backed up by multiple candles, multiple wicks. Then it moves back into the VWAP. We take the money. Tesla was the opposite side of that trade. It was the KISS pivot. You have moved up. So when you see these high flyers, these really strong stock, these post-earnings gaps, these big runners, rather than getting FOMO very early on and chasing that move, try to sit back and allow it to come back to you, to the VWAP, for another entry. Again, I'm really surprised about that Tesla. I know the system and strategy works, but I did not expect it to go up 55 or 60 bucks. I'm not going to sit there and say that happens every single day, but you can generate consistent, I will say you can generate consistent cash flow from that. That I have no doubt about. So hopefully with those two trades, you saw one of each, how that can work and how you can start using that on a day-to-day basis to make much better trades for yourself. So as you can see, when used correctly, the VWAP has incredible power. We had incredible accuracy, we made consistent money, and it proves its point that you can rely on this indicator. The rest of the money, or how big that money gets, solely depends on you. As you get better, you can scale up and you can trust that indicator more. But just from one trader to the next, just a recommendation. For all of you new traders, don't rush the process. Learn it, practice it, use as small position sizes as possible. That's why I use the small position sizes on here, because I'm not sitting here trying to impress you with gains. I know what I'm capable of. My goal here is to share my knowledge with you so you can become better. And I want to use the small sizes so you see they do add up to some pretty big premiums. And all you have to do from there is, once you get the confidence and you understand it and you realize why it's going to work, it's just a matter of scaling up. It's like the Wall Street raise. Your goal at this point in your career is to learn, is to develop confidence through that learning, is to get something that you can depend on and have a focus and direction every day. That way you're efficient. So I hope that you learned that with the VWAP. I hope you've learned that through the rest of the videos that I have produced. And if you ever have any questions about anything, guys, make sure that you reach out to me either through the comments section or the emails. And I'll take this one last piece here before I wrap up this video. Make sure you go to therumors.com. We produce a watch list every week. I'm now going to be uploading videos that will increase this education that I won't be publishing here on YouTube. So it's important, if you want to learn more, it's free. I'm not asking anything for it. I'm just sharing my 25 years of trading experience with you guys so you can become better. Again, I hope this video had some value. If you have any questions, any recommendations, or anything you'd like to say, that's why we have a comment section. And on that note, take care. Trade well, guys. Until next time. Cheers.